So $1 trillion was just wiped off the stock markets this morning, and people are arguing over whether this is because of war escalating in the Middle East or whether it was because of the warning that Donald Trump sent to one of the biggest countries in the world in this clip.
We're going to cut off all trade with Spain. We don't want anything to do with Spain.
So that is Donald Trump announcing he wants to cut off all trade with the G7 giant Spain. Again, they are a multi-trillion-dollar economy. And this is very important because markets right now are sending us a little bit of a warning. We can see the NASDAQ has just hit its lowest level since November 2025. That's nearly 4 months in the making. And the S&P 500 has also hit its lowest point in 4 months. So today I want to explore what is going on in the markets. What is the truth? What is happening? Is this the beginning of a 2008 style banking crisis, because we are seeing a lot of stress emerge in the private credit markets? Or is this just a little bit of an economic Cold War between America and China, and maybe Europe is getting caught up in the crosshairs? I want to start breaking this down by, again, just reminding you, this is kind of strange. The Fed's ACH network also went down this morning. Again, you know what they say about technical glitches happening in the banking system. It's always a server error. There's never an issue in the banking system. I just think that's a small little tidbit or something very interesting to keep in the back of your minds. But before we really dive into the American angle, I just want to quickly explain what a lot of people are talking about. We know that 20% of the world's oil supply flows through this little thing called the Straits of Hormuz. Now, again, I'm not going to laugh as a political expert or a oil expert. I'm just a kid with a shit haircut on the internet. The only reason that I think you guys need to be paying attention to this, I think the takeaway from this is 20% of the world's oil flows through the Strait of Hormuz. And this is very important because if Iran is blocking that strait, who is this going to affect the most? Have a look at this. I think Peter Sononge put out a really good clip this morning. He found that 90% of Iran's oil was going to China and 70% of Venezuela's oil was going to China. Again, think about this for a moment. This is actually fascinating. Trump invades Venezuela. He doesn't invade, but he creates a lot of conflict with Iran. Both of those countries were moving a ton of oil to China. And again, as we can see from this little infographic that was floating around on Twitter, this is going to affect countries like China and India more than any other countries. Look at these countries: Iraq, Iran, Saudi Arabia, Qatar, UAE, Oman. All of these guys, they are reliant upon this Strait of Hormuz to export their oil. And we can see India and China, I think, are going to be royally screwed by this, but so is Europe. Have a look at this. I think this is kind of interesting. And again, a lot of people might be thinking, Luke, I don't give a shit about the oil or the natural gas market. And again, I understand, I'm hearing you guys, but I think if we're seeing stress in the oil and the natural gas market, guess what that's going to mean? Inflation, higher prices. Then this is going to lead to, what's it going to lead to? Money printing. What are they going to do if the markets start to tumble, if the markets start to see a little bit of weakness? All of this stuff is interconnected. Again, we've been looking at the stock market here for a little while now, and it's kind of strange that we're being told that everything's fine, everything's hunky-dory, but the NASDAQ, for example, that actually hasn't put in a new high since October 29th, 2025. That's nearly, 5 months ago? And the S&P 500 has just kind of been putting in marginal highs. And what I think is absolutely fascinating about the Dow Jones is look at the Pico top for the Dow Jones recently. This little Pico top occurred on the day that that politician was being asked. The prosecutor was saying, hey, why haven't you put any Epstein's, the people, accomplices mentioned in the Epstein emails in jail? And she said, look at the Dow. It's at 50,000. The Dow's at 50,000. And again, that would kind of be very poetic that marked a little bit of a pico top on the Dow Jones Industries. Again, this isn't a trading channel, but I think a lot of the stress that you can see or the stagnant nature in the stock market, we're now just beginning to see the narrative that's going to be walked out to cover the ungodly amount of money that is about to be printed. And what's really interesting is maybe some assets are beginning to sniff out that money is about to be printed. I think before we get there, I just want to cover what's happened to EU natural gas prices. We can see that natural gas in the EU is up nearly 50% this week. Again, higher natural gas prices, higher oil prices. You know what that is going to lead to? That is going to lead to higher inflation, and that is going to lead to a little bit of a conundrum for central banks around the world who have enormous debt loads. We can see this is natural gas prices. This is showing it's up by 100%, doubled. I also saw UK is really struggling. And guess what else is going to struggle? The narrative 180 mind bend that's going to be going on. We can see on the 26th of January, the EU gives final approval to ban Russian gas. But guess what's happening now? 10 hours ago, the Financial Times came out and said this. They said, oh, hang on a minute. Wait on. Let's do a little 180 here because we need to urge Ukraine to allow access to a pipeline carrying Russian oil and bring that to Europe. Again, so you can see once again the impact that the blockage of the Strait of Hormuz is going to be bringing to the world. And if you start thinking about things with a little bit of a geopolitical tinfoil hat, you might be able to start asking some really important questions. Again, if America is going after Venezuela and Iran, some of the largest oil producers in the world, who does this hurt the most? Europe, who is supposed to be America's ally, and China. Now, speaking of Europe, and what I think is very important to take out of this clip from Donald Trump, I want to play the rest of the clip that I didn't actually play for you guys. I want you to pay very close attention to who Donald Trump mentions in the beginning of this clip.
The European, like Spain, has been terrible. In fact, I told Scott to cut off all dealings with Spain. Spain, first of all, it started when every European nation, at my request, paid 5%, which they should be doing. And everybody was enthusiastic about it, Germany, everybody. And Spain didn't do it. And now Spain actually said that we can't use their bases. And that's all right. We could use their base if we want. We could just fly in and use it. Nobody's going to tell us not to use it. But we don't have to. But they were unfriendly. And so I told him we don't want to. Spain has absolutely nothing that we need other than great people. They have great people. But they don't have great leadership. And as you know, they were the only country that in NATO would not agree to go up to 5%. I don't think.
So this is the part of the clip that I want you guys to pay very close attention to.
Off all dealings with Spain. Spain, first of all, Scott, to cut off all.
I told Scott to cut off all dealings with Spain. So who do I think he's talking about? I think he's talking about our boy, big Scotty B, Scott Bessent, because what's really interesting about the Iran situation and how their currency collapsed literally by 99% overnight, that was triggered by America. It was because of what Scott Bessent admitted in this clip here.
Is created a dollar shortage in the country. At a speech at the Economic Club of New York in March, I outlined the strategy. It came to a swift and I would say grand culmination in December when one of the largest banks in Iran went under. There was a run on the bank. The central bank had to print money. The Iranian currency went into free fall. Inflation exploded. And hence we have seen the Iranian people out on the street.
We created a dollar shortage in Iran. Are they going to do something similar to Europe? Or is this targeting of Iran actually a little bit of a 4D chess move that not only hurts America's arch enemy, China, but also Europe? I don't know. I'm just the one here with the shit haircut putting dots together that might not be connected, but I think this is super interesting. I think a few of you guys in the chat have come to the conclusion as to where I'm going to take this live stream. It all leads back to more printing, more and more printing. I'm going to circle back to the chat here in a moment. But again, what's super important about Iran, one of the largest oil producers in the world. We can see the US is number one. They're the top dog, the top daddy. Then we've got Saudi Arabia, Russia, Canada, China, and then Iran and Iraq. Both countries, well, let's just say they've had a magnifying glass on them for many, many years from America. And it's not because of their geographic location. I think it's more a function of what they have under the ground. But again, where is the signal here? So I want to point out a few coinkydinks, and maybe we all put on the tinfoil hat together and we start connecting the dots as to why we are seeing what we are seeing today, and the reason and the timeline of why we're seeing what we're seeing today. What I want to show you, okay, so we saw in December something really interesting happens in America. We can see all of a sudden the Federal Reserve for the first time in 3 years said, whoa, hang on a minute, we got to start printing money out of the wazoo here. Maybe things aren't so hunky-dory behind closed doors with the banking system. We saw liquidity start to spike. We saw the Federal Reserve literally wipe out 2 years worth of tightening in 3 months. Naturally, people are kind of looking around saying, hang on a minute, why are we printing $40 billion of money every single month? This started in December, and since then, we've kind of all been looking around, scratching our heads and wondering, what is happening? Why are we now printing money? What's happening? Where is the crisis? You can see, look at how much quantitative tightening that we wiped out. If only they printed the money and gave it to us so we could buy some Christmas presents for our Christmas presents for our parents or our family. But no, where is that money going? That's the question you guys need to be asking yourselves. Why? Well, the money printer was the warning. We did a live stream on this in December, and we said, pay very close attention. Shit is about to get real. Again, make sure you subscribe so you are notified when we do drop these live streams. But we said, be on a lookout. Stocks are looking a little shaky. They look like they're on a cliff's edge. And now we've seen the Iran, let's call it an intervention. We saw an intervention last week in Mexico. And again, coinky dink, Mexico is one of the largest silver producers in the world. And now, obviously, we saw Venezuela in January. So again, I think all of this is screaming the money printers are being turned on. Again, let's have a look at the price of oil before I take this video in a different direction. This can't be the official price of... Is that oil futures? Let's try again. I want to show you guys the price of oil. Yeah. Well, I'll find that in the background. Just trust me. Oil prices are going up. Some banks are even predicting $150 oil. I think I saw one of the big multi-trillion-dollar banks in America predict. And that's all because shit is going to have to escalate. And what I find fascinating is the fact that I think the money printers were already coming well before we saw this Iran invasion. I think gold and silver really spelled that out for us a month ago, a year ago. We can see gold and silver. If we zoom out, you can see the incredible rally that they have had. And again, we keep talking about it. Gold does not double in under 12 months without a massive crisis coming in the following months and years. Now, what I do think's, let's just say, a little bit interesting is maybe, just maybe, money is starting to rotate out of gold and maybe go elsewhere. I did see this chart here. We've got gold in gold, fittingly, and then we've got in the white, we've got Bitcoin. So for the first time in a year, Bitcoin has actually started outperforming gold in the short term. Some people are looking at that and saying, hang on a minute, that's kind of interesting. One of those people who is not saying that is our friend Ray Dalio. He came out with a brand new clip this morning. I might play a piece of that for you guys right now because, again, when the world's largest hedge fund manager talks, I like to pay attention.
And being able to hold it. So it's not just individuals, it's institutions and so on, but most, and central banks, so that there are attributes of that. There has been some question or thoughts of the development of, new technologies like quantum computing and so on. Can there be issues regarding that? And then there's, who owns it and what are the other exposures that they have in their portfolio. It tends to have a pretty high correlation with the tech stocks. So from an ownership, just the supply demand is affected by if somebody gets squeezed in one thing, they sell something that whatever else they have. So there are those dynamics. It's a long way, and it's a relatively small market. That's a relatively controllable market. I think a lot of attention has been given to Bitcoin, but as a money, it's small in relationship to gold, and so those are the dynamics. There is only one goal.
What about silver?
So that's Ray Dalio when asked about central banks buying Bitcoin. We can see very clearly that central banks have been buying a lot of gold. And for the first time in about 30 odd years, central banks are now holding more gold than treasuries. Again, this is the signal. This is the transition that we're living in. As Dalio lays out in this, great video that most of you guys are aware of, we are in the conclusion of an 80-year long-term debt cycle. We're going to see change accelerate. We're going to see, sadly, I hope I'm wrong, more conflict this decade, not because conflict is just for the fun of it, but we're going to see more and more excuses for our central bankers to print money. It's as simple as that. Whenever you have so much debt, central banks, governments, they need excuses to print a ton of money. Again, we are living in the fourth turning today. And I'll remind you, all of this was predictable. We can see every fourth turning over the past 500 years has ended in a massive war that reorganizes society. In our current fourth turning, 2008 to 2030, many are anticipating a war to break out between China and the US. I fear there's a much worse form of war already underway, and that is, of course, the war on reality. We are living through the separation of money and state. We're living through a swing back towards decentralization, away from centralization. And this is what a lot of people are missing. They're getting lost in the source. I wrote this, again, this is from a 2021 article that I wrote looking at all of these cycles. You can see today we're living through the conclusion of the 90-year fourth turning cycle, the 250-year revolutionary cycle, the 75-year long-term debt cycle, 250-year empire cycle, 50-year tech cycle, and the transition into the digital age. We're moving out of the industrial age. This is why I called it our most important decade within our most important century. This decade, the 2020s, is going to be nuts. I opened up this article from, again, 2021. I said the magnitude of change we're going to experience this decade is something many of us haven't seen in our lifetimes. It's this recency bias that leaves most people tremendously unprepared for the transformative change barreling towards us in the next handful of years. Again, the reason why I said all of this is purely an economic reasoning. We're seeing more debt today than we've than we saw during World War II. If I pull that up, you'll be able to see what I mean. And again, what's very interesting about the amount of debt that we have today compared with the 1940s is the fact that what did we see in the 1940s? We saw really high inflation. We saw high oil prices. Here's the chart that kind of shows us where we are today. And again, it's not just an American issue. This is a global issue. The world has more debt today than it had in the 1940s. We can see 1946, public debt as a percentage of GDP was 106%. This is the end of World War II. Today in 2026, we're above 100% and projected to hit 172%. Again, how do governments deal with their debt? They print money, devalue the money, and they pay back the debt with the devalued dollars. It really is as simple as that. Again, I don't want you guys to get lost in the hot sauce of listening to all the geopolitical experts and your Mike McGlones who are selling gold and silver and predicting a big crash in those assets. Like, we are living in reset times. All your traditional models will continue to break down. Again, why has the yield curve completely broken? Who remembers all the macro gurus in 2022 screaming, the yield curve has inverted, a recession is coming? Where's the recession? It's not here. All of these traditional models are breaking down because we're living in the most important decade in human history. We're living through the unwinding of all of these cycles that most people are just completely unaware of. Let me show you another model that's broken. So the ISM business cycle model, we used to have 4-year cycles of liquidity expanding and contracting. This is now turned into a 5-year cycle. Again, we've never seen the business cycle stay contracted for 3 years like we've just seen, but we have. Most people's models need to be updated. And what I think is super interesting here is, by the way, this is what I was talking about earlier, UK's wholesale gas prices absolutely surging. Again, we saw that energy crisis in the winter of, I think, 2022 in Europe. A lot of people said, oh, look, the hyperinflation doomers were wrong. Energy prices have fallen again. Don't be so sure. Don't be so certain. The structural imbalances have not been solved. Europe does not produce its own energy. Countries like Germany have shut down all its nuclear reactors. They are screwed in a deglobalizing world. And it's only going to get crazier. That's why you continue to see all of the crazy laws being passed in Europe. Not going to go down that rabbit hole and that tangent in today's video. I want to keep this a little bit more focused on the markets. Here's another graph showing us maybe a little bit of a decoupling happening now. Again, it's very early. I don't want to get ahead of myself. If the markets do get a little bit of a swift kick in the nuts and we see a 10% correction in the S&P or the NASDAQ, maybe we get a better buying opportunity in Bitcoin. Again, what do we always say? Time in the markets is better than time in the markets. And if you haven't at least started to dollar cost average into Bitcoin while it's 50% down, it's probably unlikely that you're going to buy it if it goes any lower. So again, if you have 0 Bitcoin today, that is absolutely the wrong allocation. We can see that the boomers have bought a lot of Bitcoin this week. We can see Eric Balkunas writes that we've seen a record $1.5 billion of inflows in the past 5 days in the Bitcoin ETFs. He writes, biggest haul in a while. Just about all of the original 10 spot Bitcoin ETFs seen action too. And this is after a 50% correction in the price of Bitcoin. Boomers don't care. Saw this image. Boomers DCA in a 50% drawdown. They are looking pretty gangster right now. And I do have some more data to show you who else has been buying the dip, because this is super interesting. Again, if you guys want to be buying the dip, again, you can either buy Bitcoin from a centralized exchange or you can mine Bitcoin. I always tell you guys that I think mining Bitcoin is the superior option. Blockware right now, my partner, is running a buy the dip promo where they're offering you 40% off hardware and 1 month of free hosting. So again, if you haven't checked out what Blockware is doing now, is a great time to do exactly that and start buying, because as I mentioned, more billionaires are buying. Have a look at this. Michael Saylor's Stretch product that he has is buying nearly 1,000 Bitcoin a day. We can see Stretch has bought 800 Bitcoin today. I'll come back to Michael Saylor and what he's doing in a moment. But have a look at the ETF flows. Enormous. What color is that? It's a turquoise dildo. That's a big one, that is. Again, if you've got zero Bitcoin because you're listening to Ray Dalio, I don't know what to tell you guys. But shit is literally hitting the fan right now. And as this tweet lays out, a new credit crisis has started. I want to read this tweet. While everyone is distracted, there is a snowball rolling downhill, gathering steam, getting bigger and bigger. Feedback loops are in process. Liquidity in credit doesn't matter until it does. Financial reflexivity works both ways. Blackstone's flagship private credit fund hit with a wave of redemptions. They pulled out $1.7 billion. Again, Blackstone's massive, so I don't think this is a huge piece of news in and of itself. But when you start considering the broader macro picture, this is when we do need to start paying serious attention. I've got a couple of more things I want to dive into with you guys today, but I also want to check in on the chat. I firmly do believe that we're living through a cold war. I have a couple more charts I want to show you, looking at maybe what we can expect with inflation and money printing in a moment. But because again, again, like I mentioned earlier, recency bias. I certainly wasn't alive in the 1970s. But I want to show you guys a chart looking at what inflation did during the 1970s, when we did see oil embargoes, a lot of conflict in the Middle East. We can see inflation spiked to above 10%. Oh, this is oil price. I've rug pulled you guys there. Let me just show you inflation, because from memories, the 1970s was the second most inflationary decade. And what a lot of people forget about the inflationary 70s is, as you can see, there's always a narrative explaining why we're seeing oil prices high. You can see Vietnam War. We got the 1980 recession, the second oil shock in 1979, the first oil shock in 1973. We saw oil embargoes. when in reality, if you were paying attention to the monetary reset that happened in 1971, you would be prepared for a chaotic decade. Again, Nixon took America off the gold standard in 1971. He essentially said, you're a shitty piece of paper. Sorry, you can no longer give us these pieces of trash and get gold in return. Again, I think we're living through something similar today in the 2020s. We're living through one of these transitionary periods, and most people are trying to attach like political answers to what's going on. So again, just keep that in the back of your mind when you see all the charlatans saying, oh, inflation is back and it's because of the evil Houthis and the blockage of the Hormuz Strait. No. It's all nonsense. Our governments are swimming in debt. We can see the money printers were turned on in December last year. All of the chaos that we've seen in Q1 is literally just a fourth turn-in. It gives our governments the excuse to not only screw China, but print a lot of money. You guys in the chat. Yeah, maybe I'm due for a little bit of a snippety snip. Crazy tariffs on barber scissors over here in Lima, Peru. Truth in the chat says, absolutely. This is all by design, planned a very long time ago. And again, I want to make sure that I'm not being completely insensitive. What we're seeing right now, it's crazy. Let me show you a little bit of a chart or a graphic that shows the depth of the retaliations from Iran. Again, war is a horrific thing. Let's be very clear about that. We can see Israel, the UAE, Dubai, Bahrain, Kuwait, Qatar, Saudi Arabia, Jordan, Iraq, Oman, Syria, Cyprus, even the UK, France, and Italy that had bases in different countries have all come into contact with, let's just say, a little bit of conflict. Iran is lashing out. Oil prices are up 13% in a day. Flights have been suspended. And things are escalating. Again, just be super cautious out there, guys. Again, a lot of people have asked me, Luke, why don't you, I've been out of Australia for 5 years because, again, as I showed you in 2021, the magnitude of change that we're going to experience this decade is something that none of us have seen in our lifetimes. And I think Western governments are going to be freaking the flip out, trying to control the sovereign individuals who are leaving their countries. So again, but a lot of people have asked me, Luke, why don't you live in Dubai? 80% of nomads or expats are living in Dubai. I think this week, not just the culture shock that I think I'd experience, but this week is again proving or highlighting the importance of just being cognizant of where you choose to call home. Dubai is in the middle of the Middle East. It's a desert city that's not very self-sufficient. It's a big concrete jungle. I don't want to live in a concrete jungle. So again, if you are someone cognizant of your surroundings, or maybe just looking for a plan B, a second place to call home around the world, always recommend you reach out to my friends over there at the Bitcoin Way. They do have this Plan B residency program. They help you secure a new home in Bitcoin-friendly locations. I know that they have their boots on the ground here in South America and Central America. So I highly recommend you book a free 30-minute consultations with my friends over there at the Bitcoin Way so you can start mapping out your own Plan B journey. Again, I've told you guys the story of me being stuck in Australia in 2020, 2021, and the beginnings of 2022. Having Bitcoin is great for your financial sovereignty, but geographical sovereignties, most people just don't even consider until it's too late. Again, Ukraine, Palestine, Israel, Iran. Shit is escalating. Paraguay is a great option as well. A few of you guys know that I swung by there in late 2025 to try to get a tax residency. I think it's an absolute no-brainer. Let me try to get through as many of these comments as I can in the chat. Sin mustache. Shaved the mustache off for today's stream. I'll swing back to the chat in a moment, but I'll remind you guys. Exercise caution out there. As we've showed you guys, NASDAQ topped November. We've just created the lowest low in 4 to 5 months. Not going to lie, Bitcoin is holding up pretty strong here for now. But again, now is a great buying opportunity. If we get a chance to buy lower, I will be buying that dip in serious size. Bitcoin's 50% from its highs. Now is not the time to be, putting your tail between your legs. I hope that doesn't get taken the wrong way. Now is honestly the time to be planning for your future. Again, if you are planning for your future, Bitcoin should obviously be a part of that plan. It's an absolute no-brainer at this stage. I think we're going to see another spike in inflation, by the way. I am not living in Paraguay. I'm just getting a tax residency in the country because it is an absolute no-brainer for anybody with a Western passport. It is an absolute no-brainer. If you're paying 50, 60, or even 70 to 80% of your money to the government in the form of taxes and inflation in the West, I mean, I think it's an absolute no-brainer that you really start looking after your own money. Again, while we're talking about looking after your own money, keep your heads on a swivel out there. Geopolitical war means you're going to see more chaotic and desperate people. Man charged with impersonating a postal worker in Seattle, trying to extort Bitcoin from a Seattle couple. Again, I always remind you guys, these physical attacks are increasing. If you've got Bitcoin at your home, highly recommend you consider setting up a time-locked Bitcoin wallet or a multi-signature Bitcoin wallet. My partners over there at Bitvault have a very simple, easy-to-use application that helps you create a time-locked wallet or a multi-sig wallet in minutes. I think it's a no-brainer if you're looking for that extra layer of security. You can get 10% off if you use the link down below in the description. Again, price is sideways. Now is the time to buy that dip like the cookie monster eating cookies. Well said. Guys, I want to keep this one super short and sharp. Haven't been live much over the past couple of weeks because, to be quite honest, there just hasn't been a lot of news to talk about. But again, when there is news to talk about, I'll go live. So make sure you subscribed for that. With all that said, I did a recent video looking at which assets survive monetary resets. I'll put a link to that one right there.